strong day of trade with the Nifty gaining over 100 points led by buying in financials and IT stocks. Nifty Bank rallies 1%, life insurance and NBFC stocks see gains as well. Midcaps underperform with the midcap index gaining 0.3%.
So Matto in focus as a block deal of over 5,400 crores sees 2% equity change hands at a price of 257 rupees. Sources indicate that Singapore-based Antfin is the likely seller.
Nucleus Software surges 20% as the board is set to meet on the 22nd of August to consider buyback. AEI Industries and Polycab gain after UBS initiates coverage on both with a buy rating, calling them the best plays on India's electrification drive. Ola skids, the stock sees profit booking after doubling in price from listing day.
Hello and welcome. Good afternoon. You're watching us here on Halftime Report, and it's a wonderful time for the markets. If you're a bull right now, it's been led by the Nifty Bank. The Nifty Bank has crossed the 20-day moving average, and as a result of which, the Nifty is holding pretty above that 24,700 mark. What's heartening is that the broader market's doing extremely well as well, with 1,400 stocks in the mid-cap index, or rather across the NSE, advancing for just about 900 stocks which are declining. I'm Mangalam Malu. With me, as always, Ekta Batra. Ekta, looks like a good afternoon.
Hi, Mangalam. Yes, absolutely. It's looking like a very steady afternoon at this point in time for the market. So we have the Nifty, which is up around 0.5% as we speak. And it is seeing a steady up move across the indices. In fact, the Bank Nifty is also outperforming after yesterday's little bit of sluggishness that we saw for the Bank Nifty. But separately, we have the US markets as well as the lower crude prices, which have really supported us in terms of the kind of up move that we've seen. Banks are seeing buying today. That's also because of, there was nothing too averse from the FM meeting which took place with the PSU bank heads yesterday. So all of those bank stocks are seeing some amount of gains today. But separately, just want to point out that there's one particular company which stands out, Saraswati Sari Depot. It's a very small company. It's a new listing today, around 800 crores plus in terms of market cap. But it's a good up move that we've seen. So up around 27% for that particular counter. Issue price was 160 odd rupees, so it's seen a good up move on listing day and subscribed 107 times. A wholesaler of saris, so interesting concept there. But nonetheless, everyone, there's some takers for a different story every day in the markets.
There's some takers for a different story every day for the market. You know, what will be very interesting is to see that looking at this outperformance of Saraswati Sari, would the street start ascribing some valuation to Titan's, ethnic wear business, Taneira, as well, because I remember, earlier Titan was all about Tanishq and some value ascribed to their watches business. Thereafter, when Lenskart went ahead and, raised some funds from ADIA, people started ascribing some valuation to Titan's eye care business as well. And now that they have, a listed, what do you call, comparable. In Saraswati Saris, will people start valuing Titan's Taneira business as well or not is something that we'll keep an eye out on. But for now, it's an incredible, story that keeps coming about every time.
Yes, absolutely. And they're wholesalers as well as retailers. So maybe, the positioning of Titan would probably be a little more premium, I would assume, as compared to what Saraswati's core business is. But nonetheless, we're tracking a lot of stocks in today's trading session.
A lot of stocks, and one of them you're tracking is Sequence Scientific. They've got some pre-qualification for a drug in, or an API rather.
Well, yes. The news with regards to Sequence Scientific, which has moved up around 6% in today's trade, is that they've got a pre-qualification approval from the World Health Organization, the WHO, for albendazole API. Now, basically, they already have a partnership with Mepro Pharma for a particular drug which uses this API. So, Mepro has developed and commercialized the albendazole chewable formulation from WHO's pre-qualification plant using Sequence API. So it's already been used. Now, Mepro's chewable formulation is the first global approval of its kind by the WHO pre-qualification. It's used to treat a range of parasitic infections such as tapeworm, roundworm, hookworm infestations which affect people globally, particularly in low and middle income countries. So the Sequence API has now got WHO pre-qualification. They've already they are already used in manufacturing a particular drug which already has WHO qualification. So that's the supply chain. Now, the company says that the WHO pre-qualification recognizes Sequent's commitment to stringent international standards in the production of the API, ensuring efficacy, safety, and quality. It also validates their manufacturing capabilities and reinforces their dedication to providing high-quality, affordable medicines. So in any case, it just gives a little bit of more certainty that they've now got a pre-qualification from the WHO for their API. That's the reason why the stock is up around 6%.
All right, that explains why that stock is higher. Let's talk about another one which is on our radar, Navneet Education. The first management that joins us on the show, Gnanish Gala, who's the MD at the company, joins in now to discuss more on the way ahead for the company itself. Stock's seen a bit of, an up move from the lows right now. But the important part for Navneet going forward would be whether the curriculum changes happen or not, irrespective how the performance in their, tech business, edtech business, along with the stationery business pans out. Thanks a lot, Mr. Gala. Always a pleasure speaking with you. You had earlier, made a target of domestic stationery business growing at 12 to 15%, with margins in publishing close to around 30%, with 13% margins in stationery. First quarter done, academically the strongest quarter of the company. How do you see this entire year panning out? Because on the top line, there was some sort of softness, just about 1% growth that we saw in the first quarter. All right, we'll just try and repatch that connection with the management of Navneet Publications. Remember, okay, we got him back. Yes, sir, go ahead.
Yeah, so first thing I would like to clarify here is that this being a seasonal business, the best way to see the business is from October to September. So first quarter, we may have some moderate growth, but overall for the year, we are still very confident about our growth in the stationery business, and which we maintain that we'll be growing at that percentage, between 13 to 15%. With regard to curriculum change, yes, now that both the governments, Maharashtra and Gujarat, have decided to change the curriculum from next year. So this year will be quite muted growth, but from next year we are likely to see good growth for next 3 to 4 years.
Okay. When you say good growth for the next 3 to 4 years, let's narrow it down a little bit and talk about your entire fiscal, which is FY25, and then what you're expecting for the next 3 odd years. For FY24, your revenue was up around 3 odd percent, your margins were around 17%. But your profit was up over 20%. Can you replicate these kind of numbers? Are you probably aiming to do a higher revenue growth? What are you aiming for in FY25? And what might your 3-year CAGR be, given the fact that you're anticipating growth to improve?
So as I said, FY25, we are not likely to see much growth in our content business, that is publication business. But the stationery business, as I said, would grow between 13 to 15%. And therefore, overall, at a company level, we should be growing at around 10% for FY25. For FY26 and onwards, once the curriculum starts changing, the growth in publication will start for sure. Only thing that in 1 year, we may not see substantial growth. But as a CAGR, we would grow between 15 to 16% for next 3 years.
Okay.
Right.
And just on the margins and profitability for FY25, since you are anticipating 10% revenue growth, margins, what would they be, considering that you had challenges with paper prices in FY24?
Yeah, so overall, because the growth is very muted in publications, versus the operating expenses to go up every year based on the inflation. So as far as margins are concerned, we are again hopeful to maintain the margins as the paper prices have softened. So FY25, we would more or less maintain the margins as FY24. But once we start seeing the growth going forward, the margins should improve a bit.
All right. What about exports? You had lost business last year. There was weakness, understandably. You said that it'll come back this year. What is your prognosis here? What proportion now comes in from exports?
So overall, of the total business, export is around 35%, and which is likely to grow every year 2 to 3% more to the total revenue, because as a percentage it will grow much faster. As far as the opportunities are concerned, we have lots and lots of inquiries from various customers that we have, particularly from the Western world, and therefore in exports, the whatever orders that we had lost, we have solved that problem, and therefore we have regained that business. So overall, exports is likely to grow much better.
How much better?
As I said, on an average, both businesses, domestic stationery and exports in stationery, this year will be growing similar, around 15%. But going forward, we are very confident that exports should grow beyond 15% for next couple of years.
Oh, okay. All right. So confident on exports. What are you envisaging in terms of a product pipeline when it comes to, say, your non-paper stationery segment? We do understand that you're evaluating various R&D within that space. Can you tell us how much are you spending? What are you evaluating? How much do you want it to probably be as a percentage of your total sales, and what is it currently?
So at present, non-paper stationery is hardly around 5 to 6% of our total revenue. If I talk about just the stationery, it would be around 4% of the total revenue. Therefore, we are developing lots of new product ranges. As a process, we always receive smaller orders at the beginning of the decision by our customers. Once they are satisfied, then they really ramp up their demand or the order. Once we see that the ramp up is happening, we have already rather planned installing capacities to manufacture such product ranges, and overall we are likely to see good growth. So if you ask me on the FY26 numbers, we may reach around 6 to 7% of our total revenue in exports from non-paper. But if we talk about 3 years down the line, that should be at least 15 to 16% of our total revenue.
All right. Just finally, before we let you go, Mr. Gala, you announced a 100 crore buyback as well. Is this from the proceeds of the sale that you had done in, Navneet Learning, or is this just in lieu of the dividend that you would pay every time? What we want to know is, because the last time you joined us, you said all the proceeds from that sale will go into funding capex of the stationery business.
Yeah, probably. So it was overdue as far as paying back to our shareholders are concerned. And added to that, we received this sum from sale of stake, and therefore board decided to give back immediately.
So with this, what is the remaining cash on your books, and are the promoters going to participate in this buyback?
Yeah, promoters are going to participate. And as with respect to cash on the books, as we speak, we have 300 plus crores sitting in with us as a cash.
Okay. Any further deployment that you're thinking about?
Deployment would be major expansion in stationery over the next 3 years. So every year we would be investing between 75 to 100 crore in stationery for the stationery business. So major deployment would go there.
All right, 75 to 100 crore in stationery business. Machinery typically gets you about 300 to 400 crore of revenue. So we'll keep an eye out on growth out there as you deploy that money and bring that back in terms of asset turns as well. Always a pleasure speaking with you. Thank you so much. We will have a conversation towards the end of the next quarter as well, as that will be a good season for you too. The street likes the commentary coming in from Navneet Education. The stock was up around 1%, but now has spiked to the high point of trade as the company expects exports to grow a lot faster. All the lost revenue in exports comes back, and at the same time, they maintain their guidance on stationery and publishing business margins going forward. Take a short break, come back, get you more on the markets. Also connect with R. Jeevanandan, who is the MD HOEC, to discuss their business outlook. He joins us from the sidelines of the Motilal Oswal conference.
Welcome back. Well, steady for the markets, up around 1% currently for the Bank Nifty. We have a good advance decline ratio on our hands as well. So around 2,000 stocks plus advancing, with around 1,700 stocks declining on the Bombay Stock Exchange. But let's talk about one particular company now, HOEC. We have R. Jeevanandam, who's the MD of Hindustan Oil Exploration, who joins in from the 20th Motilal Oswal Annual Global Investor Conference. Hi, sir. Thanks very much for joining in. If you could just start by telling us what are your targets for volumes for FY25 from the Dirok 1 well that you all have just finished on?
Yeah, Dirok 1, we have tested an untested sand 9. And it has flown very well, and it has given off a choke 6 million cubic feet of gas. But the total volume we have it is under estimation. And after seeking partners' approval and DGH approval, we will communicate the volume therein. This will increase the recoverable resource of the field.
All right, just hang in there, Mr. Jeevanandhan. You know, when we spoke, there were some lines coming in from our team at the ticker. Vedanta has moved to the high point of trade, and that's largely because of an announcement that is coming from Hindustan Zinc, where they've announced an interim dividend of 19 rupees per share. That amounts to about 8,000 odd crores. Vedanta, being the holder of Hindustan Zinc, tends to get about 5,100 crores from this dividend itself. And additionally, they've also launched an OFS for Hindustan Zinc, for which they've garnered about 3,100 odd crores as well. So all these factors put together means a lot more money coming in for Vedanta, and that explains why that stock is higher as well. Hindustan Zinc, understandably higher because of the dividend announcement that has come by, but mind you, there is very limited float available in the market for Hindustan Zinc itself. It may increase as the OFS for Hindustan Zinc goes with Vedanta, but for now Vedanta gets about 5,100 crores. The stock has moved higher. Let's get back to our conversation with the management of HOEC. Mr. Anandan, you announced a 1,000 crore capex plan for the next 3 years. What does this mean in terms of your yield in the kind of asset turnover that you generate? Maybe if you could give us an earnings impact.
So this 1,000 crore capex would be spent both on onshore and offshore. This will increase the volume of HOEC share from less than 3,000 barrels of oil equivalent to 15,000 barrels in 27-28.
Okay, what will the earnings growth look like, and will you plan to raise any funds?
So we don't intend to borrow anything. This would be through internal accruals, and the earning by reference to the current market, current price, with the volume projected, we would be able to get the EBITDA in the range of 1,500 to 2,000 crores. That is our target. That is our visible projection for 27 and 28.
All right, 1,500 to 2,000 crores. If you could give us a sense on the spread between gas and oil production and any possible changes around it.
See, we don't think now the gas and oil are almost no longer a byproduct. It is a joint product. We get 80% of the value of oil for gas. So our will be predominated by the gas production, and it would be in the range of 60-40.
Any update on the B80 and what is the value that you are currently deriving from that? If you could just give us a sense.
Today we are getting about 12% of the Brent price for MMBTU. And whereas previously we were getting about 22%, this gas price is moving akin to LNG price in India.
And what about the government's notification of 20% premium on gas pricing? Are you penciling in any impact on HOEC from these new discoveries?
We are waiting for the gas grid to be connected, then the demand picks up, and our new wells to be drilled in Dirok and Karsang would have some value impact.
Okay, all right. Well, on that note, we're going to leave it. Thanks very much for joining in and speaking with us. So that's HOEC. The stock is up around 0.7%. Just coming back to the Hindustan Zinc and Vedanta story, just to apprise our viewers, remember that Vedanta holds around 64.9% stake in Hindustan Zinc. and we'll get around 5,100 crores of that 8,028 odd crores of the interim dividend, which has been approved by Hindustan Zinc, which is worth around 19 rupees per share. We'll take a break, but Sachidanand Uttekar of Trade Bulls will join in next with some trading strategies. Stay tuned.
Welcome back. You're watching us here on Halftime Report. Perfect time to get you the FNO set up at midday. It's been a stellar day of trade so far, with the Nifty upwards of that 24,700 mark as well, a near 150-point gain that we're seeing on that index, and it's been led by the financials. So if you look at the Nifty Bank, it's up almost 1.2%, 600 points out there. The Nifty Financial Services Index also up around 1.5%. And in today's up move, the Nifty Bank has gone ahead and crossed the 20-day moving average, which was an important resistance to watch out for. Now the room opens up for the Nifty Bank to cross past that 51,000 mark. 51,300 thereabouts is where the 50-day moving average is. If HDFC Bank, its largest component, the move is likely to sustain for the Nifty Bank as well, then we can see it cross past that 50-day moving average, because yesterday HDFC Bank defended the 20-day moving average, thereafter went above the 50-day moving average. It's not only HDFC Bank and a couple of these private sector banks, but all the other financials as well, aiding the cause of the Nifty Financial Services Index. So SBI Life up 3%, 2.5% higher on Bajaj Finserv, HDFC Life up 2.5% as well. So what this has done is it has taken the Nifty Financial Services Index past that 23,200 mark, and it's an important mark. Why is that? Because the 23,200 call has the maximum open interest out here, and if we sustain above these levels, all these call writers will have to run for cover, and as a result of which we will see a further up move on the Nifty Financial Services Index itself. And we are seeing a fair amount of short covering pressure on the Nifty already. All those who had written the 24,600 call, as you can see, here the premium has increased by almost 80%, whereas the open interest has decreased by about 24 lakh contracts, telling you that there is short covering at the Nifty 24,600 call. And that's not all. We've seen a reduction in premium on the 24,700 put and addition of open interest, telling you, bulls are writing that 24,700 put, hoping for the support of the Nifty to move higher to 24,600 thereabouts itself. In terms of stocks, I'm watching out for IndiaMart and PNB, Punjab National Bank. Both of them should exit FNO ban in today's trading session or post today, where we get that notification from the exchanges.
Okay, all right, Mangalam, thanks very much for that. So that's the FNO setup. We have Sachidanand Uttekar of Trade Bulls joining in now to discuss what he's strategizing today. Sachidanand, welcome to the show. Well, it's a good day for the markets. We're seeing all of the indices in the green as we speak. What's your call? How would you approach trade?
Good afternoon, Ekta. Good afternoon, Mangalam. I think clearly the kind of breakout which we saw on the Nifty during the Friday's trading session, we saw it confidently trending above the 5 and 20-day exponential moving averages. The cluster was acting as a resistance at 24,300, and post that we have already seen a very strong rally unfolding right now. So we expect this particular momentum to continue towards 24,940 eventually. The base is now well established at around 24,550 kind of a zone. So unless this particular base is defended, the rally is expected to continue throughout this particular week. When it comes to Nifty Bank, it's a very similar setup that we saw in the Nifty last week. Now the Nifty Bank was struggling, to cross that 20-day exponential moving average resistance, and today we have seen it confidently trending above its 5 and 20-day exponential moving averages both. The daily RSI has also given a breakout above 50 levels. Now this particular breakout has occurred after almost a month. So we are expecting that this particular move may extend its rally towards 52,000 when it comes to Nifty Bank. So that's why we are recommending building long positions in Nifty Bank on an aggressive basis. The stop loss for the trade is placed somewhere close to around 50,480 on the spot levels. And we are expecting this particular rally to continue towards 52,000.
Okay, all right. And stocks?
The focus is on financials and insurance stocks. If you look at the structure of HDFC Life, we have seen a very gradual correction in the last few weeks. And if you look at the overall structure, it exhibits a bullish flag formation. which is again a continuation pattern. The pattern is indicating a target of around 740 on the higher side positionally. The intermediate target is placed somewhere close to around 722, and that's why we're recommending building long positions in HDFC Life. The stop loss for the trade can be placed at around 692. The other stock which has been doing well in today's trading session is Bajaj Finance. Now, if you look at the overall structure for the last 9 weeks, the stock was in a very strong, bear trend. We have seen a breakout from a falling wedge formation. Now, whenever falling wedge formation is found, it is a sign that there's an intermediate bottom which is in place. So the 6500 base looks very strong and confident, and from that particular base, we have seen this move unfolding. So we are expecting that this rally may continue towards its 200-day exponential moving average level, which is placed at around 7,000, and that's why we are recommending building long positions in Bajaj Finance. The stop loss for the trade can be placed at around 6650.
All right. Thanks a lot for that, Sachi, giving your index views as well as stock calls. With that, we'll step into a short break. Come back on the other side. We'll have Manisha Gupta joining us with all things commodities.
Welcome back, and joining us on the show now is Peter McQuire. He's CEO at Exim Australia. Peter, hi, good to have you. And what a big move that we've seen in crude oil prices overnight. 3% down overnight, 6% down now for the week. And yes, there are various reasons, starting right from the ceasefire conversation to the very weak Chinese data. What is your sense on how much weaker can crude go?
Well, good afternoon, Manisha. It was a great market to short, and I'll tell you what, considering also that the US dollar's been hit very hard. So I think there's a few dollars to go yet. It's got to find a floor, but seems to be just it's falling. And, you know, that sluggishness as far as Chinese growth and year on year, it's down about 4% from an import perspective over that first 7-month window. So I think there's a few bucks to go yet. And yeah, let's just see how it rolls. But it's a time to be short, I'd say, for the short term.
Peter, would you say that the fundamentals are so weak that even as the dollar index is trading at a 7-month lows below 102, hasn't been able to support much?
Exactly right. I mean, you know, that US dollar index has really come under big slide yesterday. It went from about 102.50 and then all of a sudden it was down under 102. So considering crude's had such a big sell-off, coupled with the US dollar index coming under pressure, that really demonstrates the fragility and softness across the whole complex. So where we sit from here, if I want to see what happens as far as Fed Chair Powell, and then of course I think crude's got maybe it's going to hit a 70. I mean, you got the market at just under 74 for WTI. I think a couple extra dollars stripped out of it early this week could, or by Thursday, is a real chance.
Peter, what's your sense on where the dollar index can take support from here? And when it comes to Brent now, where do you see, or what range are you anticipating for the, let's say, next 1 month or so?
Well, Manisha, I'm hanging on every word, comma, full stop, you name it, that Fed Chair Powell delivers at Jackson Hole, because if it's going to be a 50 basis point cut, that's going to really whack the US dollar. I think it'd really make it the best chance you could get even in the hundreds. I know it's high 101 at the moment, it's 101.90, but I think it's got real big softness if 50 basis points are stripped out of it. And the other side is, I think there's just a general sentiment, is the US going, it seems to be away from that recessionary fears as the stock market's at nearly a record high. So it's a very volatile market at the moment.
It absolutely is. But some bit of a support is what we are looking at in case of metals as a sector. Would you recommend a buy there?
Well, you saw copper up. I mean, that had a nice rally to the upside, and it's still, that 92.500. So it's, shopping around. It was at 88, and then all of a sudden now it's at 92.5. Some of those other metals have had a nice little rally as well. So overall, I think could be a little bit further upside, but it's choppy. It's hard to get a real, you've got to be a short-term trader. You don't marry a trade like this, Manisha. You just look for opportunity and then have a chance at profiting from it.
So, I mean, as you said, there is the FOMC meeting minutes that are due on Wednesday. Jackson Hole meeting comes in on the weekend. And between that, there's a lot of economic data still coming in from various other countries. How would you want to trade the current week in light of all of that?
Well, I think US equities possibly up. I think further softness as far as the crude complex. Keep a very close eye on gold. I mean, you're nearly at an all-time high. And then you've got to be conscious as far as where US dollar travels over the next couple of days. It's been choppy. There's plenty of opportunity. The euro's at nearly at 111, so 1.11. So I think there's possibly a little bit further uplift there as well. You've got PMIs coming out for UK and Eurozone, and you've got those CPI numbers coming Thursday or Friday for Japan, Manisha.
Peter, one more question, and this one is on Indian markets itself. While, of course, we are looking at metal prices, there are reports that the metal companies would go ahead, cut some prices here, because we haven't seen that happen yet. But the other thing also is about crude, where we have seen the Indian self-sufficiency in case of crude continue to decline. I mean, until last year, we were 85 to 86% dependent on imports. The latest number for this year shows that it's almost at 89%, with various reports suggesting that we will sustain above 90 in a year or so. How do you look at India with US elections in November, the crude oil prices where they are, and the geopolitical tensions?
Manisha, I'll start with geopolitics first. That's the unknown. That's the wild card, and no one knows what's going to happen as far as the positioning with Russia and, of course, Ukraine. What happens with Israel versus Iran, and then those counterparties that'll join the whole argument, be the likes of Russia and, of course, China. I think they'd fall in under Iran. So this is creating a lot of uncertainty to, I think, geopolitics globally. And I feel as though that could happen before the election. So we're only about 2.5 months out. I'm expecting a real hot October. And then you're looking at the other side, as far as what you mentioned, as far as crude. If there was something to really bounce it, that'd be the wild card. That'd be the big kahuna, which is geopolitics had just rocketed higher.
All right, I take that point, Peter. Thank you so much for joining in and giving us your outlook on oil. Manisha as well for taking us through with that conversation. The Brent price is close to around $77. Positive for a lot of these OMCs and oil users in trade today. Case in point, something like an Interglobe Aviation, which is doing well. Paint stocks doing well as well. But just before we slip into a short break, a couple of stocks that definitely deserve mention. Angel One is one of them, up around 12.5%. Following up on the gains that we saw yesterday. So taking that, weekly gain on Angel One to about 22%. Mind you, the stock had corrected about 33% from its 52-week high as well. Ramdev Agarwal of Motilal Oswal liking the capital markets theme. And the other one is Godfrey Phillips, a big mover in yesterday's trading session. Again, following up with another 6% up move, taking this week's moves, the last 2 days' moves, up to 22%. In fact, this year itself, the stock has rallied a whopping 163%. So that's about a bunch of stocks that are buzzing around. On the other side, we have the management of Lemon Tree Hotels joining in to detail their business outlook. Patanjali Keswani joins in. Market continues to do well. Moments ago, we spoke about, Angel One having rallied about 13.5%. Let's look at IIFL Securities as well. That's the one that's doing extremely well. Like Ramdev pointed out yesterday, they're positive on financials, and capital markets is a theme that they still believe can continue to do well. Poonawalla FinCorp is the other one, which is sitting tall with a gain of almost 7% Hinzinc earlier announced a dividend of almost 19 odd rupees per share as on an interim basis. Now the stock's seen further spike up around 3%, and on the back of that, Vedanta as well higher as it stands to get 5,100 crores as that dividend. But let's get our promised conversation with the management of Lemon Tree Hotels. Patanjali Keswani joins in now from the sidelines of the Motilal Oswal conference. Thanks a lot, Mr. Keswani, for joining in. Always a pleasure speaking with you. The first quarter obviously was understandably impacted by seasonal weakness, the ramp up of Mumbai Aurika, and at the same time you had set aside some expenses for renovation of your portfolio. So just wanted a status check on all these three factors itself. Have you seen some recovery in occupancy in the second quarter? What does Mumbai Aurika stand at now in terms of occupancy, and how many more months before the portfolio is renovated? What's the prognosis here?
So Q2 will be somewhat better than Q1 in both occupancy and certainly in ARR. Aurika, well, whether it is Q1 or Q2, it's off-season. It'll take a little more time, but in H2, as I have said earlier, it will pick up to where we hope it'll stabilize at. As far as renovation goes, we are doing the maximum renovation in H1 of this year and H1 of next year. Our main focus is the high-value lemon tree premieres, which have not been renovated for some years, till before COVID, and the full portfolio of keys. So broadly, if you ask me, Q2 will be better than Q1, quite significantly in fact. H2 will be much better than H1. And with the renovation of this portfolio, well, I think we will be positioned and reimagined as a completely new hotel company by the end of next year.
Okay. So when you say Q2 will be better, occupancy as a whole was 66.6% in Q1. Average room rate was around 5,686. It was up around 9%. Give us a ballpark in terms of what the incremental growth could be Q on Q.
Well, as I said, it will be better. I don't want to give a ballpark. All I'm saying is it will be much better than Q1 in terms of EBITDA and in terms of profitability. And this will continue into Q3 and even more into Q4. But very specific guidance I would prefer not to give.
Okay.
Okay, take that point. On the Mumbai Aurika itself, you said that H2 will stabilize at levels where you expect it to be in the long term. So, wanted, what is your long-term objective for the Mumbai Aurika? And on your renovated rooms, I wanted, a sense of the economics. How do they play out? Say for every 1% expenditure that you do on renovation of rooms, how much higher can the ARRs and, the concomitant impact on your EBITDA be?
So our broad perspective is that the incremental expenditure we are doing on renovation, which will be roughly 100 crores a year for this year and the following year, we would expect a payback within 2 years. So if we spend, say, 100 crores this year, I would like us to see an incremental EBITDA beyond what we would have normally done of 50 crores more every year after that. So 200 crores means effectively what I'm saying is that I would like to see a 100 crore improvement in EBITDA annually once this renovation occurs. Now, as far as Aurika Bombay goes, which is your first question, see, Aurika Bombay is a very, very large hotel. When I look back at the first hotel we built in Bombay, which was a 300-room hotel, it took 7 months for it to hit a 75% occupancy. And then today, I think today it is at 90% occupancy at about 7,500 rupees in summer. I would like Aurika to hit 70% in H2. But as I said, it's 670 rooms. So really it will take a year, which means I would reckon that by next winter it should be at 80-85%. But this winter we should be north of 70%. And that's what I hope we will achieve.
Okay. All right. We've completely run out of time, and I'm sure you have a busy schedule at the Motilal conference as well, Mr. Keswani. We're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is Lemon Tree joining in from the sidelines of the 20th Motilal Oswal Annual Global Investor Conference. On that note, we're wrapping up on Halftime Report. Business Lunch up next.